Hello and welcome back to Principles of Accounting 2. I'm your host, Dr. B. We are in the middle of the spring 2022 semester, the second week for Principles of Accounting 2. So, Module 1, Week 2, we are about to enter Chapter 19 to talk about job order costing. For those of you who are playing along, if you open Module 1, Week 2, you will find both Chapters 18 and 19. There's a couple, the PowerPoints, the exercises, the quiz, and the homework. The quiz and the homework are due this Sunday night for both chapters 18 and 19. The exercises, those are just practice. There is no need to submit the exercises. Those are only for your practice. Help you to better understand the concepts. That's directly from your feedback that we talked about last semester. So let's go ahead and jump into our discussion on job order costing. So the word job, and I'm going to try to break this down for you in the simplest terms. The word job means there is a specific task to be done. It's a job. I have a job. The job is a customer came in and ordered 6 candles. It's a job, so I'm going to make 6 candles for that one customer. That's what we call a job order. The customer placed a job order. It is specific to that customer. Okay? That's what we call a job order. And there are costs associated with manufacturing those 6 candles for that customer. Direct materials, direct labor, and factory overhead. And so we're going to talk about how direct materials, direct labor, and factory overhead get added up based off of the customer's job order. Job orders are specific to the customer order. Very specific to the customer order. We, in job order, focus on production of large, unique, or high-cost items. They're specific to the customer rather than being mass-produced. They're very specific to the customer's order. And I can directly trace direct materials, direct labor to each job. And I can also trace some factory overhead to each job. That's what job order costing is. It's specific, it's unique, and it's based on the customer's order. So when you hear job order costing, think unique order from the customer. An example of that would be, let's say you have a screen printing business. And in your screen printing business, you have a customer order. And you're going to fulfill that customer's order. You're using the job order costing system by doing that. You might not know that you are, but you are. So that's job order costing. And that's what we're going to talk about today. Next week, we will talk about process order cost, process cost. Job costing is specific to the customer. Process costing is continuous. Job order is specific to the customer. Large, unique, high-cost items. Like a car, for example. Process costing is continuous, regardless of customer order. Here's an example. In job order costing, we might manufacture a car or a bunch of cars for one customer, for one order. In process costing, we focus on continuous processing. For example, Ben & Jerry's, ice cream manufacturer, right? Everyone knows Ben & Jerry's. Ben & Jerry's, or Dreyer's ice cream. There's a couple of other big names out there, right? So think of like an ice cream manufacturer. When you go to the grocery store, you're walking down the dairy aisle, the frozen aisle, the ice cream aisle, and you see a ton of ice cream. It's like, dang, that's a lot of ice cream. And a lot of it's the same, right? Vanilla, chocolate, uh, vanilla again, chocolate again, right? It's all the same stuff. That's made based off of process costing. It's continuous. It's homogeneous, meaning the same. It's the same thing over and over and over again. They call that process costing. Another example would be Tyson's Chicken. I like Tyson's, it's a good brand. Tyson's Chicken. Or Purdue or Tyson's, right? Those are the two big chicken processors. They process the chicken and they turn the chicken into uh, chicken wings, chicken tenders, chicken nuggets, chicken, whatever's. It's called process costing because they do that regardless of the customer orders. It's continuous. That's process costing. We're going to talk a lot about that next week. But today, this week, we're going to talk about job order costing. I just want you to understand the difference between the two. Job order costing is focused on the customer order. The customer order. The products are heterogeneous in nature, meaning there's a lot of different ones. Okay. It's typically low production value. In other words, I can only manufacture 5,000 cars a day on this assembly line. Okay, that's low production value in the world of car manufacturing. The product, the car, is relatively flexible. You can customize it, your car. Oh, you want leather seats? No problem. I'll put the leather seats instead of the fabric ones. Or you want a manual transmission instead of the automatic? No problem. I can make that change. Or you want the sunroof? No problem. I'll put that sunroof in. Customization. High flexibility. And there's low standardization in car manufacturing. Like, yeah, most of the time the process is the same, but the standards might not be the same for each car. That's what job order costing is. It's focused on the customer order. That's job order costing. Process costing, it's repetitive, homogeneous, high production volume, low flexibility, high standard. Earlier I gave the example of the ice cream manufacturer, the Ben & Jerry's, the Dryers, the whatevers. Another example would be the water bottles. Your Poland Spring or your Aquafina or your whatever, your soda. Let's say you like soda. Oh, the Coca-Cola, the Pepsi. It's all the same stuff. And they make hundreds of thousands of these bottles every second or every minute. And they're all the same. Same amount of water, the same color, the same label, the same cap, the same shape. And I'll make millions of these things every day. That's process. It's continuous. And it's regardless of who orders it. They'll just keep bottling it and put it in storage until it sells. That's process. So job, focused on the customer order. Process, continuous, same product. I'm going to go back to the car example. Because again, it's the best example to understand. When I start making a car on the assembly line, I'm doing it in just in time. Okay? Then just in time, I'm doing it based on the customer's order. The customer put an order in for a car. The customer's order of the car is the job. Customer ordered a car. My job is to build that car for the customer. That is the job. Okay? Now, in order for me to make a car, I need direct materials, direct labor, and factory overhead. So the first thing I do is I fill out a requisition form. I send that form over to my raw materials warehouse. The raw materials come out of raw materials and into work in process. That's direct materials. Yeah? I'm also going to use a little labor and a little overhead at each stage in the work in process. So each department of work in process, as the car is moving down the assembly line, I'm adding a little bit more materials. I'm adding a little bit more labor. And I'm adding a little bit more overhead at each stage as the car moves down the assembly line. That's work in process. Until that car rolls off the assembly line and becomes finished good inventory. And then when the customer accepts delivery of their car, it becomes cost of goods sold. So in this example that we're looking at right here, job 15, that's one job, that's one car, one customer order. Job 16, that's another job, that's another car, that's another customer order. Same with job 17, 18, 19, so forth and so on. Each job is a unique customer order. In manufacturing, the costs flow with the job. The cost flows with the job. What I mean is, each job starts as raw materials. To make a car, I need steel, aluminum, car engine components, other parts. Those are my direct and indirect materials. Right? It starts as raw materials. I fill the requisition. I take the cost of those raw materials and I put it into work in process. Then as it's in work in process, I'm adding more materials, I'm adding more labor, I'm adding more overhead. And I keep doing that until it becomes a finished good. Then I add up all of those direct materials, all of those labors, all of those overheads to become a finished good. And I add all those up to equal the total cost of the finished good. And then when I sell it, it becomes cost of goods sold. But we see that we track the flow of the cost as it moves through the process. So the job is, and I'm going to show you this next, it's called a job order cost sheet. And it tracks all of those costs for that particular job using the job order cost sheet. The job order cost sheet is unique to each individual customer order, the job, right? That's why it's called a job order cost sheet. I'm tracking all of the materials I've used, all of the labor I've used, and all of the overhead I used for that particular job. So I take all of the direct materials that make up the total cost of the car. I got some steel, some aluminum, some engine components, some wiring, etc. I add all those up. And then I got a lot of employees working on this car at different hourly rates. And I track those hours being worked by time tickets. Or, when they punch the clock, right? When you punch in for work, you punch out for lunch, you punch back in for work, you punch out to go home. Why do you do that? Well, that's because your employer is tracking the hours that you worked. Okay? The reason why employers track our hours that we work is to then bill the customer for those hours based off of the actual hours that we work in the manufacturing process. Okay. IKEA. Overhead. Okay, let's see what's going on. IKEA overhead. Let's talk about this. IKEA, you asked a great question. If the overhead is underapplied, it means that the individual was charged too much, which also means the cost of goods sold are too high. let me think about that for a second. So if the overhead is underapplied, that means I did not charge enough. If it's underapplied, I did not charge enough. If it's overapplied, that means I charged too much. And in which case, the cost of goods sold will also either be over or under, depending on which had happened. So yes, you're on the right train of thought. We'll break it down, don't worry. Overhead, since we're on the topic of overhead, overhead can be applied in a couple of different ways. Because you think about overhead. Overhead, as we had said earlier in the last chapter, in our last discussion, we said that overhead cannot directly be traced to the manufacturing process, right? It's overhead. Like I can't directly trace depreciation or utilities or the supervisor's salary or whatever. Too hard to do. What a lot of businesses do is they use a percentage of something like direct labor to figure out how much overhead to apply to that job. It's not an exact science. I mean, it's close. It's close, but it's not always exact. Like for example, some companies might decide, oh, I'm going to charge 160% of direct labor. That's how I figure out my overhead. That's good, but that may not be the most accurate method, right? That we call that a single plant wide rate method. Single plant wide rate method is what this example is using. They apply the same percentage to all the jobs, basically, using this method, single plant wide rate method. Well, that may not always be the most accurate. Some companies might use, which is way more accurate, they might use the activity-based costing method to apply factory overhead. That's more exact. That's more exact. We'll talk more about applications of overhead in a future discussion. But I just want you to understand that overhead is not always treated the same way for all companies. They usually select one of four methods. And in this example, they're using what's called the single plant wide rate method. And the percentage is based off of direct labor. That's how they factor it. That's how they factor overhead in this example. So I just want to kind of give you an idea of how the overhead rate is being calculated. So in this example, the overhead is 160% of the total direct labor cost. Well, 160% of 1,000 is 1,600. So that's where that overhead rate came from, just so you understand that. So the total job order cost sheet is all of the direct materials used for the job, all of the direct labor used for the job, and the application of the factory overhead. So we add up all of our direct materials plus all of our labor used for this job plus the overhead applied equals the total cost of the job. Direct materials plus direct labor plus factory overhead estimate equals the total job cost. Job order cost sheets are so super handy. They're super handy in tracking the cost for each job. That's how I know how much to bill my customer. Yeah? Earlier, I had said, for each job, in order to receive our direct materials from our raw materials warehouse or raw materials yard, I complete what's called a job requisition form or a requisition form. Sorry. The requisition form is filled out to request requisition materials from the raw materials warehouse for that specific job. Okay? Requisition form. In the raw materials warehouse, we have this thing called materials ledgers. A ledger, as you know, is tracking the amount coming in and coming out for that account. That's a ledger. We talked about ledgers a long time ago back in Principles of Accounting 1. Ledgers are also used for inventory. And it tracks the amount of inventory coming in and out for each type of inventory. We do the same thing for raw materials. So in my car example, I might say, oh, I got 1,000 pounds of steel that I purchased. Minus 400 pounds of steel requisition for a job. Plus additional purchases, minus additional requisitions. Gets me my ending balance. The point is, we use ledger cards to track the inventory, raw materials coming in and out. That's what I want to talk about. So here's an example of that raw materials ledger card I was just talking about. We purchased some, so it was received. We purchased some raw materials from our supplier. It was received, 2 units of it. We issued 1 unit of the 2 for a specific job. And so we can see, and we can also track the balances. Yeah. This is an example of that requisition card. Here's an example of the requisition itself. So the requisition, the materials requisition, this is, here's the job order number, here's what I need, who's requested it, etc. It's basically like a tracking ticket. It's how I track the inventory as it moves out of raw materials and into work in process. And so I add all of my requisitions that I'm using for that particular job to the direct materials. And that's how I find my total direct materials that I've used for that job. And then in this journal entry, this adjusting journal entry here at the bottom, this journal entry shows the raw materials the inventory coming out of raw materials and into work in process. Out of raw materials and into work in process. Record the use of direct materials. So we talked about raw materials, how we track that for each job. Now let's talk about how we track labor for each job. As you know, we have direct labor and indirect labor. Direct labor, those are the employees working directly on the job. Direct labor, those are the employees working directly on the job, on the assembly line, right? And I track the amount of hours worked on each job using this thing called time tickets. The time tickets could be a stopwatch, could be an actual punch card, could be a computer to track the actual hours being worked on each job by each employee. You could have multiple employees working on one job. But it's important that we track the exact hours that each employee is working on each job through the use of time tickets. I also track my supervisor's salaries and other people through indirect labor. And you know that goes on into factory overhead. Here's an example of a time ticket. This is one employee working on one job, and I've tracked the time that this employee worked on that job. And I take the total time worked times the hourly rate to get the total cost for that one employee for that one job. I add up all of the other employees that worked on that job to get the total cost of labor for that job. And of course, this is how I track how much to pay my employees. Hourly wage times number of hours. And of course, I need to allocate that labor to the total cost of work in process. Because remember, work in process is the direct materials used plus direct labor. So the direct labor, how do I track that to work in process? I debit work in process inventory to increase the value of work in process inventory, and I credit wages. Wages payable, in this case, getting paid again. And of course, it wouldn't be a job without talking about factory overhead. We talked about direct labor, how we track that to each job. We talked about direct materials, how we track that to each job. Now, of course, we need to talk about overhead and how we track that to each job. Now, earlier, I had said that what a lot of companies do is they use what we call the single plant wide rate method. Single plant wide rate method to apply overhead. And it's usually an estimate that is being applied here. And this actually gets back to Kia's earlier question with respect to underapplying and overapplying. So Kia, because we use an estimate to apply overhead, there's a risk of underapplying or overapplying the estimate to the job. And so here's how it works. We set the predetermined rate. It's an estimate. The predetermined rate is set by taking the estimated overhead cost divided by an activity base. The activity base that we used in this example, or for this company, is direct labor. Okay. So we took the estimate overhead cost divided by direct labor. So we take the overhead rate times the actual amount used. So the overhead rate, 160% in our earlier example, right? Times the actual amount used, the actual direct labor used, $1,000 in that earlier example, right? So that's how we find the predetermined overhead rate. So first we set the predetermined overhead rate, then we apply that to each specific job, 160%. We record the actual overhead used, and then we adjust if it's over or under applied. And we do that during each part of the time period, yeah? Beginning of the time period, during, and then at the end. And this goes back, Kia, to what you were referring to earlier with your question.
Thank you.
You're very welcome. So how did the company figure out 160%? Well, we took the estimated overhead cost divided by the estimated activity base. The estimated activity base in this example is direct labor. It's usually, that's why we call it predetermined, because the company determines what their estimate is for overhead and what the base is. The example here is 1.6, 160%, right? So 160% or 1.6 is the predetermined factory overhead rate. We apply that to each job. So in the first example, it's 1.6 or 160% of direct labor. If the direct labor for one job, B15, is $1,000, then we know that the applied overhead is going to be 1,600. And so we add up all of our applied overhead for all of the jobs during the accounting period, and then we take that amount and apply that to work in process. Because remember, work in process includes all of the direct materials that you got from raw materials, plus the direct labor that was used to work directly on the jobs, plus all of the factory overhead that's used for those jobs. So we apply what we call applied factory overhead. So we debit work in process inventory to again increase the value of work in process inventory, and we credit factory overhead to increase our recognized factory overhead. And again, the predetermined factory overhead rate is 160% of direct labor, at least in this example. Now, remember, that's an estimate. 1.6%, 1.6 or 160%, that's an estimate. Because before we started the accounting period, we estimated what our total overhead is going to be. We also estimated what our activity base is going to be. So because it's an estimate, we need to then make adjustments based off of the actual overhead. And I find the actual overhead from looking at indirect materials, indirect labor, and other factors to find the actual overhead. So the actual overhead, in some cases, may come in below underapplied or above overapplied the estimate amount. And when that happens, I need to make an adjustment. So first I find the indirect materials used, then the indirect labor used, plus the other factors like depreciation, rent, utilities, insurance, etc. I add all those together to get the actual overhead cost. Now remember, the actual overhead cost is going to be above or below the estimate. And in that case, we need to adjust. And we need to make the adjustment based off of underapplied or overapplied, whichever the case may be. And this is a terrible slide, but I'm just showing you, this is showing us the physical flow, the cost, kind of like what we talked about earlier. Based on the physical flow of the cost, this is showing the journal entries that are made, the physical flow of the inventory. The schedule of cost of goods manufactured, which we talked about earlier, direct materials plus direct labor plus factory overhead equals total manufacturing cost plus beginning balance equals total cost work in process minus ending balance work in process equals the total cost of goods manufactured. And this is where the overapplied, underapplied comes in. How do we find the over or underapplied? We take the actual overhead and compare that amount to the estimated overhead. Okay, so, and this is how it works. If the actual overhead is greater than the estimated or applied factory overhead amount, then it is said to be underapplied. If the actual overhead is less than the applied or estimated overhead, then it is said to be over applied. And we need to adjust the difference, right? So if it's under applied, we debit cost of goods sold to get our cost of goods sold up because, just as Kia had said, the difference is in the cost of goods sold, right? So if it's under applied, we need to debit the cost of goods sold to raise our cost of goods sold because, remember, it's under, right? So if it's under, we need to raise the cost of goods sold to get it to balance. We credit factory overhead to increase the factory overhead. Because remember, it's under applied. If it's over applied, I debit factory overhead and I credit cost of goods sold to reduce the cost of goods sold to get it to balance out. Those are the adjustments we need to make when it's under or over applied. And so how do we determine those adjustments? Or how do we make those adjustments? Debit cost of goods sold, credit factory overhead. If it's under applied. Finding whether it's under applied or over applied, again, we need to compare the actual overhead to the applied or estimated overhead. So yeah, with respect to service companies don't have factory overhead, but they might have similar things. They do have direct labor and they do have direct materials, but service companies treat their overhead with respect to the materials used for their respective customers. So services are a lot different than manufacturing companies. For service companies like an airline or an advertising agency or a hotel business or bar business, whatever, those service businesses have similar job order costing systems that they could use to track. Oftentimes they don't, but they could, especially if the business is like an accounting firm, a law firm, a advertising agency. The services that they provide are specific to the customer, and those can be tracked by their own job order cost sheet. The difference is there's not going to be direct materials in most cases. There will, however, be overhead. So they could track direct labor and overhead used for specific customer jobs for things like an advertising job or an accounting firm might have a customer, a dentist, a lawyer. They track their patients or their clients just like they would job costing. The difference is for the service business, the patient or the customer is the job. And that, my friends, is the end of our discussion on job order cost system. And any questions, comments, concerns about job order costing?
No, sir.
Thank you, Mike. Makia, how do we do? Did I answer your question all right?
Yes, that answers my question. Still processing, but I think I understand.
Cool. All right, good. That makes me feel good. All right, cool. Awesome, wonderful. Okay. If there are no other questions on job order cost systems, if you think of anything, you can email me, call me, set up office hours. You can set up office hours with me right here on this link. You can set up tutoring. You can email me, call me, whatever. I'm here for you. So if you think of anything, and again, remember this for this Sunday night. You got two things that are due. Yeah, the Chapter 18 quiz, Chapter 19 homework. Chapter 18 quiz was on the earlier chapter when we talked about managerial accounting, the basics. Chapter 19 is on job order cost system. Remember, there are 2 attempts for each homework assignment and each quiz in this course. Of the 2 attempts, the higher of the 2 grades will be accepted into the gradebook. Before you begin any quiz or homework assignment in this class, I do strongly recommend you review the PowerPoint presentation and you try some of the exercises. Remember, the exercises, those are not homework. You don't have to submit those. The exercise is just for your practice only, for you to be able to understand and be able to apply what you're learning in Excel. And so that's my recommendation for success throughout the course. And so with that, I really sincerely appreciate all of your time today. You're all doing wonderful so far. I'm looking forward to a great next few weeks with all of you. And so with that, I want you to please remember to stay safe, wash your hands, and do the right things. And I'll see you all again next time. Thank you all so much for a great time today. Appreciate all of you. Have a good one. Thank you so much.